Well, hello everyone. Thank you very much for joining us. I'm so excited about today's topic, all about the future of financial management, some big macro trends, and how it's going to affect each of you that are on. Many of you are current customers. Thank you for being along the journey with us, and I hope you're as intrigued by this as I am. Many others of you are in talks with our teams. We're really excited about the prospect of helping you scale your companies. And then there's a lot of you, as I was going through, we've never spoken to before, and I have to imagine it's how interesting this topic is. And I hope for all of you we get a good glimpse of where we're going. My name is David Apple. I'm the head of the SaaS vertical here at Sage Intacct. Been here 3 fantastic years. We're on a great tear on understanding where the puck's going and trying to build a product that helps our customers be real successful in building their businesses. And we're very pleased to have my co-speaker with us, Aaron Harris. Aaron's one of the original founders of Sage Intacct, and then this year was announced to becoming the Chief Technology Officer for all of Sage worldwide. And Aaron, would you just say hello, introduce yourself to everyone?
Hi everybody, this is Aaron. Super excited to be with you today talking about the future of financial management.
This is going to be a conversation. This is a presentation Aaron's given at several conferences, but we're turning this into a conversation between the two of us and with you. I'm going to ask you things to ponder as you consider how these macro trends are going to affect you, and then we've also got several polling questions mixed in. So let's jump into it. Aaron, set all this up for us. Here we go, slide 1. It's the hook to everybody understand what the point is. Go ahead, take it away from here.
Yeah, so I can't say this is one of my favorite quotes. It's actually a pretty sobering quote. This is a comment from Peter Drucker shortly before we started Sage Intacct. And, frankly, it flies in the face of, the purpose, I think, that drove all of us to get into this industry. His contention was that CFOs are the least informed about what's going on in the business. And that was, a pretty stark baseline for us to begin with as we started Sage Intacct. So I think it's pretty easy to describe, the situation that led to Peter Drucker's comments. The problem is that CFOs and finance teams, there's work to do that has to get done no matter what, right? There's this baseline of compliance, whether it's financial reporting, whether it's tax filing, whether it's getting through audits. You just have to get that work done. And our contention has been that technology has really not helped finance teams with that part of their job, so it takes up all their time. The team is completely consumed with audits, with period closes. They're using technology that really wasn't designed to be deployed across multi-location businesses. Because of the limitations of computing in the last generation, a lot of what happened within the accounting solution was slow and batched, and after the fact, we had batches, and you can sort of understand why this limitation was there, because the systems were taking in so little information about how the business performed. There really wasn't much in the way of powerful reporting built in. The reporting built into the systems, really wasn't much better than what you need to get out your basic financial statements, to get you through your audits, and to get you through your closes. So the punchline here is that, CFOs, frankly, were spending way too much of their time getting through these periodic functions that only were getting them to a point where they can look at the past and not really perform their duties of being a strategic leader. And so as we think about the future, where are we going with this? We decided that we need some really provocative statements on how we can transform the accounting industry that'll get CFOs and finance leaders and their teams out of these periodic, redundant, frankly, low-value processes and focused on the future. So the first, concept that we've been floating is the idea that the financial close, shouldn't even be a thing anymore. Why do I have to go through this periodic process to close the books in order to see, the results of my business? We envision a world where the books are always ready for reporting, where you always have real-time, complete, up-to-date information about the performance of your business. if you can achieve that that nirvana of continuous accounting, as we describe it, we also want to couple that with systems of trust and assurance, so that when you actually are looking at the system in real time and you can see what's going on in your business, you already have the confidence and the comfort that the data's gone through some assurance processes, that anomalies have been identified, that exceptions have been reviewed, and that there's technology that's assuring the accuracy of the data that you're reporting. And if we can take care of those two things, which consume the bulk of the time of finance teams, we can then focus on empowering those teams with tools to allow them to be these strategic leaders. We call this active insights, and it really reflects this idea that you shouldn't have to go looking for answers, to questions that are well defined. The system should empower you to not only, find insights and to push information to you, but using modern technologies, we can actually constantly be looking at what's going on in the business and actively identify opportunities, risks, or events that may be coming around the corner where the CFO can become that strategic leader.
It's all so powerful. And for those of you listening that maybe felt a little uncomfortable in the last slide as you heard the things that are the time sucks for you. But then I hope, because this is the crux of where Aaron's presentation is going to go, here's where the puck's going on technology enablement, make processes better, to free up your time to get even more strategic in the business. It's a fascinating vision, Aaron. What's coming next?
Well, so there's a number of technologies right now that are converging to enable this to happen. Some of these technologies are, front and center stage. They're being talked about quite a bit. Some of them are not quite as obvious and are more of a result of some of the progress that's been happening. But I've called out 4 trends here that I think they're going to drive this vision. So the first, which is probably the least obvious, is multi-tenancy and unlimited computing power. If you remember, towards the beginning, I mentioned technology has been holding finance teams back. In large part, it's because software was developed in an era of limited computing power. In today's era, especially with public cloud and elastic computing, we fundamentally have unlimited access to computing power. The next is the idea of analytics everywhere. The conventional wisdom is that you have to have specially tuned databases and purpose-built software to do analytics. And again, I think that's a reflection of a constrained view of how to build technology from a bygone era. AI and machine learning is the one that everybody's talking about. This is a set of new technologies in the way we develop software that are going to unlock ways to automate and to analyze data. And then lastly, blockchain, which is super controversial. I think everybody has an opinion. I personally have had a love-hate relationship with blockchain over the years. But blockchain, if it fulfills its promise, will have a major impact in how we look at things like trust and assurance in the future.
Well, as we play out all 4 of these, I don't know how many of you are thinking about them, but the very first one is like the biggest power, because it's part of our powerhouse with getting the technology out. So it's perfect, Aaron. That's where we're going from here.
So drill into each one of these and try to paint a picture for you, give you some some information to sort of frame the way we think about this. Starting with unlimited computing power. So just some simple facts, right? When we build solutions for using the multi-tenant approach, fundamentally what we're saying is there's just one big instance of the solution. And that one big instance is designed to support, all customers and all users, right? All customers and users are drawing from a shared, massive pool of capacity that each of those users and customers can draw from. And just to give you a little bit of a dose of reality about how big that is, For Sage Intacct, we've now deployed over 10,000 CPUs to support the product. Those 10,000 CPUs are using well over 100 terabytes of RAM. In terms of the aggregate activity that is supported across that deployment, the application serves up over 100 million application requests per day. We're doing over 1 billion API calls per month, so that's a reflection of the overall, activity in the ecosystem and the marketplace, the integrations. And we've accumulated over the years, on behalf of our customers, over 50 billion financial transactions. And so, what this picture should really paint for you is, you think about what a developer thinks about when they design a feature. They no longer have to think about, do I have the power to make this work the way that it should work for the customer? That just gets thrown out the window.
And it's that scale that those of you might not even appreciate how big it is behind the scenes, but it's what's driving all the shared data centers that are out there. So this is what the big enabling force is. Please keep going.
Yeah, and then it's growing rapidly. The Sage Intacct business from as we add more customers and the revenue of the business grows is growing very, very healthy. But we should also keep in mind that our customers are growing, really, really fast. And so, that information up there is roughly doubling, every year. So it's really, really accelerating.
Oh, it frees up so much ale.
Yeah, it's sort of mind-boggling. There's a number of things that this drives in sort of new ways, what I call unconstrained ways of thinking about how to build software, right? So the first of those is that when you've got such a massive pool of capacity, you no longer have to think about elasticity or scalability. The idea that some businesses have very uneven requirements about their processing, think seasonal businesses, or even think about businesses that are still sort of stuck in monthly processes. Scalability, and the ability to support that just kind of gets thrown out the window. And what that does is we take that a step further, and we essentially design the software in a way that we encourage customers to bring in all the data, right? So not just, the basic data needed to do compliance, bring in all the data and bring in the data with as much, attribution and characteristics to the data that they can measure everything that they care about for the business, and bring it in real time. I talked about that elasticity. If you bring all the data in real time and that data is really rich in all the attributes and the characteristics, that drives zero latency analytics, right? I can look at my business and how it's performing right now. It gives you enough computing power to, start to do real-time assurance on the quality of the data. We can spin off computing resources after transactions are processed to do some basic testing on them to look for anomalies. And lastly, and this is sort of like the big promise here, because we've been encouraging customers to bring in all this data, all this rich data, all that rich data allows us to build very, very intelligent machine learning models. All right, so the value and the accuracy of the models, is totally dependent on the richness and the volume of the data that we can feed to it. Right, so we've already been encouraging our customers to bring all this data in, so we're now at a great spot to leverage that data to build some really exciting ML capabilities.
And every bit as much as this, what does this mean for financial management software? It's what's it mean for the financial management profession and all of you listening. To me, the underlying aspect here is all the time you spend doing manual workflows changes, and you spend your time doing strategic analysis on whatever the real material levers in the business.
Yeah, if you want to get really provocative, the way we've started to describe this is what if the accounting functions were invisible? What if all the transactions just came in automatically in real time? What if compliance was something that just was taken care of and you didn't really even have to think about it, right? What if, all of the mundane periodic activities just happened for you, and you were freed up to do the analysis and the leadership? That's the future that we're driving towards. So, just putting a fine point on it, getting to this future requires the power of multi-tenant cloud computing, right? That's really the first step of this. And so the next step is, now harnessing that power to develop new capabilities that are designed on the basis of AI and machine learning. So one of the things that we've tried to do is help our customers and the industry at large understand in very practical ways what AI and machine learning means for the industry. There's a lot of hype. I think there's some anxiety, some of it, unwarranted. There's a sense in the industry that people need to embrace AI and they need to prepare for it. But what we found is customers have been really wanting to know in far more practical terms. Well, what does it really mean? What do I really need to do to prepare for it? And so, let me call out 5 basic use cases, and we'll get into some details throughout. But the 5 basic use cases are, number 1, with this idea of continuous analytics and performance monitoring. The idea that with all that rich data flowing through the system, with it flowing through in real time, we can attack that data with powerful computing capability to develop models. And when we have those models developing, we can start to identify patterns. We can start to identify exceptions. We can model out trends. We can identify when something changes in a trend. So getting it to practical terms, we can start to actually forecast how cash is flowing through the business, and we can alert you when something starts to change in that trend that perhaps wasn't anticipated. Another big use case is anomaly detection. So, once you get to reasonable scale in your accounting function, you're processing thousands, if not tens of thousands. And in some cases, we have customers processing millions of transactions on a monthly basis. There's really no meaningfully practical way to spot anomalies or exceptions when you're dealing with that much data. And, we tend to rely on controls. We rely on auditors. We've got some basic heuristics we use to find issues, but we can actually now use those models we've developed to find those anomalies in real time and alert you, from that sea of thousands of transactions, those transactions that probably warrant, a human going in and looking at what could be fraud, it could be irregular accounting, it could just be a miskeyed transaction that turns out to be material. Continuous security monitoring. With security monitoring, the state of the art today, unfortunately, is the industry drives publishers like Intact to build, really capable auditing reports into the product. So what changed, by whom, and when? How did the user's rights change? What's the access log? Unfortunately, half the time that those reports are used, they're really only used to convince the auditor that the reports exist. And the other half of the time, they're used when something went wrong. And so in the same way that we can sort of continuously monitor the business to find anomalies in the data, we think we can also look for anomalies in activity, look for things that might be evidence of a malicious actor trying to gain unauthorized access or to do something, malignant for the organization. Recommender systems is another category. So, when we anticipate the user experience of the future, we can start to get away from, the basics today that are defined by, lists and menus and bookmarks and shortcuts, and get to user interfaces that adapt based on, how we learn that the user likes to work. What are the activities they care about, that they spend time with? So it becomes a much more dynamic, reactive user experience as we learn more about the behaviors of the user. And then last and not least, and probably the most practical, the most immediate value is this idea of process automation. The idea that despite how far we've come with technology, there's still a lot of work that happens manually by human beings. that's kind of low value. So this is a really big important category, the idea that we can apply AI and machine learning to automate the long tail of manual activity that still happens within your teams.
Yeah, I'm picturing as each of you are listening and wonder what you're thinking to yourselves as to where are the inefficiencies that that are out there, that if you made things a little bit better, leveraging some of this, how the company could be even more successful. Each of them is fascinating in their own right.
So I kind of like to summarize as I go here. So we pointed out that the real horsepower, the muscle that's going to drive this is multi-tenant cloud computing, but the technology that's going to drive it is coming from artificial intelligence. So let's go into each one of these individually and peel it back a little bit, starting with this super provocative idea that we can eliminate the close. I talk about this fairly provocative outcome of eliminating the close quite a bit, but what I haven't done is actually tell people how we're going to achieve that. And actually, it's pretty simple, though there's work to execute it. It's all about converting many of the accounting processes, which are today periodic and happen as part of the month end, converting those into continuous processes. And there's I think of these in three categories. There's reconciliation, whether it's reconciling cash and credit cards or reconciling receivables. There's the continuous capture of all the transactions or all the activity happening in the business. And then there's the continuous accounting that needs to happen, as it relates to adjustments, accruals, other things that where we have to make sure that we're appropriately accounting for the results of these transactions. What's really interesting is at Sage Intacct, we have a pretty good way, I think, of measuring how far along we are towards eliminating the close. And what that gets down to is how much of the raw computing power that we've deployed to support all of our customers, how much of that raw computing power is actually dedicated to users. So we have some computing that supports users. We have some computing that drives integrations and the marketplace, and then we have other power that's allocated to offline automated work. And a way to think about it is that the way we account for all of this, basically 30% of that computing power is supporting users who are doing things manually. The remaining 70% is supporting automated stuff that's all contributing to eliminate the financial close. So, the question is, how did we get to 70%, and how do we move beyond the 70% and get to 100% of fully automated accounting processes? So, a lot of the work has already been done, and it goes back years and years to the way you architect an accounting solution like Sage Intacct, building an architecture that embraces open real-time integration, that encourages customers to bring all transactions in real time into the system as opposed to having batched daily or even less frequent processes. And then the continuous investment in technology to drive more and more automation across workflows. And so the question is, well, what's it going to take for us to get that remaining 30%? There's a lot of things, but the sort of the common enabling technology for this is going to be AI and machine learning. So applying artificial intelligence to capture the long tail of documents that come into an accounting team that are analog, that are paper documents, paper receipts, using AI to actually capture business activity when there isn't necessarily a paper document to reflect it. So user time spent on projects is a really good example. When we've used AI to drive more automation, we can start to simplify our workflows so that the time it takes transactions to flow through a system is accelerated. And then lastly, let's give a call out to our governments. Despite the fact that governments are increasingly creating burdens for businesses to be compliant, what they're also doing is they're driving some agreements about how we actually structured data about how we exchange data. So, for example, in the United Kingdom, they recently launched what's called Making Tax Digital, which has driven some common requirements for how to represent revenue. So those types of regulations will help us to actually get that uniformity we need to get data and transactions and capture activity in a much more real-time, much more structured way. So let's jump into continuous trust. Each time I give this presentation, I feel compelled, that this particular element is so important, possibly, hasn't received enough importance in the transition of the industry. If you really think about it, accounting, finance is a trust industry, right? That's the value that we provide. It's not just our ability to help organizations to make informed, intelligent decisions, based on all the data that's coming in, but it's that assurance and confidence that people in the industry carry with them, and so I just think it's super critical that a key part of this whole transition is this idea of trust and assurance, and that we can transform it from something that really has been a periodic, after-the-fact activity, into something that's a system of continuous value. So to sort of lay that out for you, let me paint a picture. So this data is a little bit dated now; it's a couple years old, but as of a couple years ago, the big four accounting firms collectively were bringing in about $40 billion in audit and assurance revenue annually, globally. And that probably sounds like a lot of money. It sounds like a big tax on all of us. And just a funny little aside here. When I first shared this statistic and took you through the content I'm about to take you through, I got in a little trouble because I didn't really paint the strategic value, and I had to do some interviews with some journalists to explain, well, what happens to that $40 billion? So I'll sort of take you through what I had to explain to journalists after I first raised the 40 billion number. But let's start with that. So $40 billion of revenue to the big four annually on audit and assurance. And where is that going? Right, where that's going is that's going to create confidence in our markets. And the big four in particular, are doing the public accounting audits. They're issuing the reviews on the publicly traded equities in the marketplaces. And just to give you a sense of scale, and this is just the New York Stock Exchange, and this goes back, actually, I think it's 2008 was this figure. There's $169 billion of trading activity on a daily basis on the NYSE. So fast forward, I bet you that's $250 or $300 billion a day now, trading volume in value on the NYSE. And back around the same time, the total market capitalization of the NYSE was about $13 trillion. I bet it's more than double that now. It's probably closer to $30 trillion in total market cap in the NYSE. So now look back at that $40 billion figure that firms are paying for to provide assurance to their investors. Suddenly, $40 billion to assure a $30 trillion industry, and hundreds of billions of dollars of trading value, and that's just in the NYSE. Turns out to be a bargain. And the problem, as I see it, is that $40 billion really doesn't provide the value we need. It's, as I mentioned, it's after the fact, right? As an investor, I only have qualified opinions about the veracity of financial results when the auditors give those annual opinions. Imagine how much more efficient markets would be if there was continuous confidence, right? If there was a continuous flow of information that investors could reliably depend on, right? So the picture that we really want to paint here is that we believe that through the power of AI and machine learning, the unlimited power of multi-tenant cloud computing, we can transform that $40 billion industry to a tactical after-the-fact activity to a strategic, continuous activity that makes our markets, frankly, much more successful, efficient, and reliable.
Yeah, that whole point is because all of you work with your auditors. We work tremendously tightly with the accounting industry and the auditor community, and this is what everyone is looking for. How do I get maximum assurance and then able to act upon it? And that's really the trend line that you're talking about with all this, Aaron.
Yeah, exactly. So one of the things that I like to do is I sort of go through the old way, where we had limited computing power and limited technology, and think about, well, if we don't have to worry about all those things, if we have no constraints, what could it look like? So if we think about audit, right? The old way, audits are after the fact. The old way, you can only deal with a sample of data because we have human beings that are doing the review of the data, and they can't possibly look at every transaction. If the auditors find a problem, it's really too late to fix. The only thing you can do at that point is try to improve your controls, try to understand from the mistake, and hopefully not commit the same mistake in the future, while you're apologizing to your stakeholders, and there's been an erosion of confidence. And fundamentally, with this way of doing auditing, you really only have periodic trust, which is really the difference in value. So if we fast forward to the future where we don't have these same constraints, auditing is real time and it's continuous, right? It's happening at the same pace as business. We're not looking at a sample of data, hoping to extrapolate a picture about the reliability. We're looking at all the data in real time. And we're able to actually change the way we do things because we have machines doing the review. Humans now are, we're taking advantage of the unique capabilities of humans to review exceptions, right, as opposed to run the tests. When you're able to do real-time auditing, not only are you able to do course correcting in real time, you may actually prevent issues from happening in the first place. If I find an issue with a purchase order, or a sales quote, that hasn't actually materialized yet, I've got time to correct that before the transaction actually is exchanged between a customer or a vendor. And then finally, and I'm probably gonna, I'm gonna keep beating this over and over and over again. You're gonna get tired of hearing it, but you're gonna get that system of continuous trust. What's the value of that? There's real meaningful value. It means that I can, if I need to, I'm a small business, I need to extend my line of credit. I can go to the bank without having to go through a review because the bank knows that I've got a system of continuous trust in place. It means that if I need to make, I'm a larger organization, I have a large transaction, a large opportunity that's time bound and is going to depend on me deploying, substantial assets. I'm going to have the confidence that I, can rely on the numbers that I'm drawing from to make that decision. And, not to be overlooked, the value of being able to sleep at night, just the confidence and the reassurance that comes from, not having to worry about whether or not you can trust the data that's flowing through the system. So to paint the picture, a little bit more and more reality here, I want to introduce you to a fellow called Pacholi. If you're an Intact customer, you've probably heard of Pacholi already. For those of you who are real accounting wonks, you might recognize Pacholi as the father, the inventor of double entry accounting, right? So this is the guy that came up with debits and credits, liabilities, assets, and owner's equity. He's really the father of the industry. And so we thought, as we start to incorporate AI capabilities into the product, let's bring a familiar persona into the product, that really I think is relatable, despite the hoodie. He's got a bit of a dated wardrobe, but a relatable, trusted figure to represent AI. And the whole idea is, to think about Pacholi as a virtual member of your accounting team. Except, Pacholi happens to be sort of all-seeing. Really is able to see everything that's going on, but takes a little bit more of a backseat role. And so one of the capabilities that we've been designing for Pacholi is the real-time assurance, right? This idea that we can do transaction testing in real time to alert you when there's specific issues. So let me take you through how we're envisioning this. A really good example of Pacioli is a virtual member of the accounting team that sees everything in real time. Right, what we have here on the screen is a user has created a journal entry. It's a simple journal entry for payroll, and some of you may already have spotted something weird. The commissions expense was actually flagged to the HR department. I don't know about you, but I've never seen a comp plan where HR is on commissions. So, and in this particular company, that's never happened. So Pacioli has flagged it, and using the social layer, we call it Intact Collaborate, as a virtual member of the team, Pacioli added to the conversation and said, hey, I need a human being to come in here and review this. That looks a little bit weird on that particular line. And in fact, if the human, in this case, her name's Sharon, when she comes in to actually take a look at it, Pacioli is pretty precise. Pacioli's calling out that unusual combination of department and the GL account on that line. So, if Sharon wants to, she can go at any time and ask Pacioli, over some period of time, look at the last month and, flag any transactions that look suspicious. And so you can see on the screen here, Pacioli has identified 2 transactions where the data entry looks like it might be off, and 1 transaction that actually has some fraud markers that we definitely want to review. So what Pacioli's done here on this this potentially fraudulent transaction, is identified the fraud markers. Really any transaction that Pacioli wants you to review, he's going to put in that work to actually guide the review process. And in this case, getting back to where the error was made, posting commissions to HR again, Pacioli's calling that out as something to review. But what's really important is that, after Sharon makes that review, in this case, she's going to correct the department. Obviously, we've corrected it, so we feel better about what's going on. But more importantly, Pacioli just got a little smarter, right? So the human has come in, the human's made the decision that only a human can make, and Pacioli is now, noting that in technical terms, it's getting fed back into the machine learning model, and the model gets smarter for the next time. And then from an audit perspective, and from just keeping track of what happened, Pacioli is going to note it, and in fact, Pacioli's a great teammate, a great communicator. Pacioli's going to use the Intact Collaborate to notify the team that there's been a review, and in fact, if we now look at the transaction that's been corrected, you can see that Pacioli's kept a pretty good journal of everything that happened with this transaction. So, this is a scenario that I think is really representative of what we can do if we imagine AI to be an extension of the team. That not only is able to look at everything in real time, but is dependent on humans to do what humans do best, and that's to come in and make intelligent decisions. And then as a really professional member of the team, does a nice job logging everything. And as a great member of the team, gets a little smarter every time a human comes in and provides some guidance.
Every time I see you do this, though, it just makes me think, wow, Aaron. And for those of you listening and watching, just imagine if you didn't have to do this anymore, cover up for, innocent or whatever types of mistakes, and the system catches it for you, and then you're still in a great position of power to still have administration and control over what's getting caught, but the actual catching of it and the rules that you're putting in to make cash flow even more streamlined in the business, that's how you really create enterprise value. It's fascinating.
Yeah, and I keep coming back to, how do you put a price tag on trust? Yeah. We've been pretty involved with a lot of Sage Intacct customers, developing the machine learning capabilities to drive this capability. And as part of that, what we've been doing is, we've been applying the models to their data, and we've been taking the results to these organizations and asking them to review the results with us. And what's been a bit surprising, we expected this, but not to the extent that we thought, is humans just don't have the ability to catch everything. And there's been a bit of surprise about what the machine finds that needs to be reviewed, some of which is material. So it's not just the time saving, which I think is critical because nobody wants to be doing this low value work. It's the trust, right? And I just don't think you can put a price tag on the value of trust.
We should have made that our polling question. Well, we should have made that our polling question for all of you is, what should we charge for trust?
Yeah, help us price this new feature, and free is not an option. Who knows? Maybe we'll make it free. I'm not in charge of pricing. Okay, so let's jump on here. So the last category is what we call active insights. We chose this phrase deliberately. That word active really implies a lot. And so let me take you through the progression that led us to land on that word active. And it's basically how reporting analytics progresses through, I think, stages of value. First of those stages is what I call day-to-day efficiency, right? So this is the reporting that you need to get your job done, right? The reporting that you need to get through your closes, to do your reconciliations, to do your month-end accruals and adjustments, the reports that you need to satisfy your auditors, and then when it comes to your to your compliance and financial reporting jobs, getting out your basic financial reports. And so you know the information you need, and you probably know how you want it formatted, and all you really want is a tool that makes it easy for you to get that data in the format that you want it. So it's quick, it's fast, and it's efficient. And for a lot of solutions, that's kind of the state of the art. Where we've really been progressing this over the years is taking that element of I already know what I'm looking for, just make it easy for me to find it. Moving into the area of, well, I know the question, I know sort of the information, the insight that I'm seeking, but I'm not sure how to find it. All right. So the second evolution is interactive analytics tools that really allow for rich, detailed, highly interactive exploration of the data. And as we talked about throughout this conversation today, the prerequisite for the second phase in the evolution is actually capturing all that data, right? It's having an accounting system that encourages you to bring in all the transactions with rich attribution and character and as close to real time as possible. And that's kind of the state of the art in the industry today. This is where we are. We can give you beautiful dashboards that allow you to look across dimensions, to drill into specific parts of your business. And they're beautiful. They're interactive. They're really cool. The problem is that you've got to build those dashboards. You have to know what are the KPIs or the measures, the information that you think is going to be interesting, and then how do you visualize that data to call out the insights, and then more importantly, you've got to remember to go to the dashboards, right? You've got to go look for that information, and so that sort of sets the stage. So now we can go back to that useful way of looking at things. How was software built when developers were constrained, and how can we do things differently? How do we take phase 2 of rich interactive analytics and we move on to stage 3? So the old way, you had to go out and you had to implement special purpose software. You had to go buy a BI tool. You had to figure out how to get data from the various data sources into that BI tool. In many cases, the answer was, well, I can do it, but I can't get all of it. Or I can do it, but I can't do it in real time. Or I can do it, but it's got to be summarized. And that software is usually running on top of specially tuned databases, right? You got to understand OLAP cubes and snowflake schemas and star schemas, right? You really have to be a trained BI analyst to work in this world. And what happens, because of these constraints, is we essentially limit the value, right? Only people who are trained and understand are able to use the tools to get answers. But I think there's a more pernicious element here. It always sort of surprises me that companies will put so much time and effort into designing their permission and their security models. They've defined roles and groups and ways of doing separation of duties, and they put users into context scenarios, so that there's limits to their visibility of data across the organization. They do all of that, and then they suck all the data out and put it into a database under a BI tool that has no such security model. So one of two things happens. Either they limit who can use that tool because they can't afford to give that broad visibility to all users, or they sort of sacrifice their data governance models. They've locked the front door to the ERP system, but they left the back door wide open for analytics. This idea that if done right, any user who needs to get information can get it if we have the right security model in place is super important. And then, of course, because you can't get all the data, you really sometimes will lose context. You don't have the drill down, right? So the no constraint world, you can read the slide here. I don't need to go through it, but the idea is you don't need specialized software anymore. You don't need to understand, snowflake schemas and OLAP cubes. You don't have to go re-implement your security model. You can safely, confidently invite all of your users into the system to look at the data. And when they find something interesting, they can drill all the way down to the context. And if they so desire, they can use Intact Collaborate to start a conversation around it. Now, we're not saying here that there's not reason for some of the great rich BI tools that exist out there. There are, right? And these will continue to only be more valuable over time. What we're contending is that the CFO and the finance team, if they really want to dig into revenue, if they really want to dig into something that's captured in the system of record, they shouldn't have to go out to an external tool to do it. They should really be able to do rich research in the system of record. So one of the things that we're doing with Sage Intacct is deploying this rich, embedded, interactive analytics tools. If you come to our user conference, you'll hear more about this. We've been previewing this with customers already, but the idea is really, really straightforward. It's fully embedded. It's running on the transactional database. You can safely give rights to any user because it follows the same security model that you've already deployed. And rather than relying on static, pre-built dashboards, it's a blank canvas with really powerful tools to allow users to interact with the data, to research the data, to drill into the data, and then ultimately to make decisions. One of the things that's really cool about the combination now of Intacct and Sage, Sage is a very large organization that really well-funded R&D capabilities, including several teams that are doing AI and machine learning capabilities. One of the things that we're working on in Sage is, I think the one bit of forecasting that every CFO wants, and that's the ability to see what's happening with cash. Again, another a plug to come to the user conference. Whether you're a prospect or a customer, we've got some really cool things we're going to show you about how we're using machine learning to actually look into the future and help you do some pretty cool modeling of cash. So getting to that
about that.
Sure, yeah, jump on in.
Well, just kind of cash flows, the epitome of where enterprise valuation's coming from, and then the ability to start looking forward to your whole key point you made at the beginning, Aaron, CFO 3.0, right? Data-centric strategist instead of the historian. For all of you listening, right? I hope you saw that. All this is building to being able to see further out into the future. Again, on the material metric that whatever industry you're in, everybody wants to know cash. So it's so cool how the pieces are coming together. That's what we want all of you to see and learn and to start thinking about for your own companies. The pieces are coming together. How do you leverage it for your own personal success and your company's success?
Yeah, it's kind of funny to me. Everybody's first reaction is, well, if you ask them, hey, we want to build out some forecasting abilities using machine learning, where do you think we should focus, right? You expect them to say cash flow forecasting, right? That's what you expect. But as a developer, you do all this work to interview customers. You spend a lot of time really probing and understanding, and you're expecting to find, some surprises. And what was surprising to me about this whole process of really working with customers is that really is the answer. Any way you slice it, everybody wants better visibility to cash flow. We interviewed one customer of a well-funded private company. They've raised a lot of money. They're growing like crazy. They've got a really sophisticated accounting team. And the CFO spends every day for 2 hours looking at cash. I mean, that's just insane. It's crazy to me that we don't yet have a world where CFOs who need to be providing strategic guidance, aren't worried about, accurately being able to see cash, right? It's just kind of crazy to me, but that's what they want, right? So that's where we're starting, and we think it's going to be really, really exciting when people start to see what we're doing there. So paint even a more futuristic vision. So where we're at here is this idea that you shouldn't even have to know what question to ask. If Petroli really is able to look at everything that's happening, Petroli is able to start to develop trends, start to understand how various measures of the organization naturally move, then Petroli is able to actually flag when something starts moving in an unanticipated direction. And so what we've called out here in this example is this scenario where a software company who manages subscriptions on contracts, and the company uses that to predict their CMRR. Petroli's been able to model that out, kind of sees the direction CMRR is going, and then one of the bigger customers, the sales quote for their renewal comes in at a pretty dramatically lower amount than forecasted. And when that quote hits and Petroli's able to see how it affects the trend, Petroli can call that out in real time, right, and can notify the CFO or some other human. And what we think is super important is it's not enough for Petroli to say, hey, your CMRR just hit a blip. It's trending a little differently than it has been. But we want you to be able to make some decisions, take some action based on what caused that, right? So you can see here in this example, Petroli not only saying, hey, something weird happened, you got a dip in your CMRR potentially, but here's a ranked list of the factors that are driving that, and that's the real power. That's where you're able to change the allocation of resources, to get humans involved. If there's a quote for a large customer that looks like it may come in below where expected, get on that, and you can actually potentially correct that before the quote gets booked. So it really isn't an overstatement to say that this kind of capability can directly impact the performance of the organization, because it allows you to focus on the things that matter, and to understand where and in precision to apply resources. So, what makes this all possible is this idea that we can collect so much data to train the machine. So Petroli's got access to hundreds of terabytes of financial data. On a monthly basis, customers are completing over 100 billion queries into their data, right? So we know what kind of information customers are looking for. In the use of the product, we collect tens of terabytes per week. of information about how users are interacting with the product. So we know what's interesting to them. We know what matters about their work. And so we can use this to develop really, really accurate models. Certainly, one of the things we haven't talked about yet, what you can do with all this data is you can develop some pretty powerful collective intelligence capabilities. So I think what most people understand and is obvious about collective intelligence is that, if you're part of a peer group, there's a couple of hundred other companies that look just like you. We can do some benchmarking. We can help you to understand where you are performing versus your peers for the KPIs that matter to you. What's really powerful, though, is when you can actually analyze all that information among your peer groups and develop the relationships that drive performance. And so, for example, we can give you recommendations that say, hey, customers that have greater value renewals tends to have shorter cash collection cycles, right? So if you want to drive high value renewals, then you need to focus on your cash collections, because that's what we can see in the performance across your peer group, where you've got some differences that you can focus on to improve your overall performance. So that now is getting to leveraging that massive amount of data across the customer base, across the organizations, to help them collectively to improve their performance. And so then of all this, getting back to, and this is my old habit of summarizing everything again, we really are driving a world where finance leaders are not mired in the repetitive, what I think are low value activities, getting through the period closes, getting through the audits, getting your compliance work done, only having periodic visibility into historical information, only having periodic trust. And these finance leaders are becoming the strategic leaders that I think we all got into the industry to be, right? And it's three really simple things. It's number one, remembering that we're on a journey to transition from periodic manual work to continuous automated work, that we're going to build a foundation of trust to support all of that automation that we're going to apply computing to. And we're going to enable each of you, as you lead your organizations, to really become the strategic leaders that you've been trained and you have the experience to be. And that's it for me, David.
Oh my gosh, thank you, Aaron. Fantastic insights to help all of us see where our careers are going, where the macro trends are going, what we can do about it to, again, help ourselves and help our companies. I hope all of you that stayed with us, because just all of you stayed with us for the whole webinar. Thank you. Got as intrigued and educated as I did. And we're a little tight on time here at the end, so we're not going to have time for questions. But if you'd like to just follow up and post questions in the chat room, or follow up with your contact here at Sage Intact, we'd be happy to take those questions and go deeper on them with all of you. So thank you very much for everybody, and we wish you a great day.
Thanks, everybody.
Cheers.